Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is Friday, September 26, 2025, and we're breaking down the Nasdaq 100 ETF, ticker symbol QQQ. The market has given us a ton of action recently, hitting a fresh all-time high just a few days ago before getting hit with a significant 3-day pullback. In this video, we'll first cover the major news and economic events driving this price action. Then, we'll dive deep into the charts, looking at multiple timeframes to map out key levels and potential scenarios. So let's get right into the news that's been shaping the market narrative this week. The biggest story right now is the market-wide downturn we've seen over the past 3 days. Barron's reported yesterday that the Dow, S&P 500, and Nasdaq all fell for a third consecutive day, with the Nasdaq dropping about 1.1%. A lot of this uncertainty is swirling around the Federal Reserve's next move. Just last week, on September 18th, the Fed delivered a 25 basis point rate cut, which initially boosted futures. However, the optimism quickly faded as the Fed's own projections revealed a surprisingly shallow path for future rate cuts in 2026. This has created what one economist called a set of so much contradictions, leaving investors guessing. Adding to the confusion, second quarter GDP was revised upwards to a strong 3.8% annual growth rate, fueling fears that the economy is too hot for the Fed to continue easing policy aggressively. Analysts are now sounding the alarm about market conditions. We're hearing phrases like short-term overbought and much higher than average valuations, suggesting a lot of the good news was already priced in. Jonathan Krinsky at BTIG even noted that equities are the most vulnerable to a downside move since the April lows. On top of all this, we have two major risk events on the horizon. The PCE inflation data is due out very soon, and Wall Street is nervously watching Congress to see if they can avert a government shutdown by the September 30th deadline. It wasn't all negative news for the tech sector, though, as Nvidia announced a massive $5 billion investment in Intel, a move that could reshape the semiconductor landscape. So, we have a classic battleground. A market grappling with Fed policy confusion, high valuations, and political risks, versus an underlying economy that still shows signs of strength. Now, let's see how this news translates to the price action on our daily chart for QQQ. Looking at the bigger picture, the long-term trend has been incredibly strong since the dramatic dip and recovery we saw back in April of this year. The price staged an impressive rally from a low of around $402 all the way to a new all-time high of $602.87, which was hit this past Monday, September 22nd. That $602 to $603 area is now our key overhead resistance level to watch. However, as the news turned cautious, the market reacted swiftly. You can see these 3 consecutive red candles representing the sell-off on Tuesday, Wednesday, and Thursday. This pullback has brought the price down to yesterday's closing price of $593.53. We are now testing a very interesting area. The first key support level to watch is yesterday's low around $588.50. If we break below that, it could signal further downside momentum. Looking for more significant support, we can see a period of consolidation in late August and early September in the $570 to $580 range. That zone could act as a strong magnet and support area if the selling continues. The most critical long-term support, of course, remains the April low around the $400 mark, but we are a long way from that level. Let's zoom in on the daily chart to get a clearer view of this recent run-up and reversal. Focusing on the action since the beginning of August, you can see the steady climb that accelerated in September. This climb culminated in that peak above $602 on Monday. Then, we see the reversal, starting with a bearish candle on Tuesday, followed by 2 more days of selling, which perfectly aligns with the news reports of a 3-day slide. Yesterday's candle, for September 25th, is particularly noteworthy as it closed near its low, suggesting that sellers were in control right into the end of the session. This pattern indicates that the bearish momentum may not be over yet. The volume has also picked up during these last 3 down days compared to the steady climb up, which adds weight to this recent selling pressure. Now let's switch to the hourly chart to analyze the short-term trend in more detail. Here, the breakdown from the highs is crystal clear. After peaking above $602, the price has been making a series of lower highs and lower lows, which is the definition of a short-term downtrend. We can see a sharp drop occurred at the market open on September 23rd, which initiated this leg down. Since then, any attempt to rally has been sold off at a lower price point, confirming that sellers are in control on this time frame. The price is currently consolidating just above the $590 level. This psychological round number, along with yesterday's low of $588.50, forms a critical short-term support zone. A bounce from here could see a retest of resistance around the $596 to $598 area. However, a firm break below $588.50 on the hourly chart would likely open the door for a move down towards that next major support zone we identified on the daily chart around $570 to $580. For an even closer look, let's go to the 15-minute chart and examine the price action from yesterday, September 25th. The day started with a gap down and immediate selling pressure, taking the price from an open around $596 all the way down to the session low of $588.50 in the early afternoon. This was a significant and aggressive move by the bears. Interestingly, we did see some buyers step in at those lows. The price then staged a recovery rally throughout the rest of the afternoon, climbing back to close above the $593 level. This tells us that while sellers dominated the day, there is some dip buying appetite below the $590 level. The battle between buyers and sellers will likely be fought around this key $588 to $593 zone in today's session. So, let's bring it all together and recap what we're seeing. The long-term trend for QQQ remains undeniably bullish, but we are now in a confirmed short-term downtrend after a 3-day pullback from all-time highs. This pullback is being driven by valid macroeconomic concerns, namely uncertainty around the Fed, historically high valuations, and looming political risks. Let's summarize the critical price levels you need to be watching. For resistance, the all-time high around $602 to $603 is the major ceiling. A break above that would be extremely bullish. Closer resistance sits at yesterday's high around $595 and the psychological $600 level. For support, the immediate zone to watch is yesterday's low of $588.50. A break below that puts the major daily support zone of $570 to $580 into play. Below that, the August lows around $554 would be the next target for bears. Now for some potential scenarios. In the short term, I believe a further pullback has a slightly higher probability, let's say 60%, given the current momentum and macro headwinds. A break below $588.50 would reinforce this bearish case. A bullish reversal, which I'd place at a 40% probability, would require some positive news catalyst, like a soft PCE inflation report. The first sign of strength for bulls would be reclaiming and holding above the $596 level. Ultimately, the market could also enter a consolidation phase between roughly $588 and $598 as it awaits more clarity. The key things to look for are the PCE data release and any news related to the government funding deadline. Pay close attention to how the price reacts at these key support and resistance levels we've laid out. That's all for today's analysis on QQQ. The market is at a critical juncture, and the next few days could be pivotal. Thank you for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let me know your thoughts on the Nasdaq in the comments below. As always, remember this is for informational purposes only and is not financial advice. Trade smart, and we'll see you in the next video.